Morning, everybody. I hope you
Good
guys are doing
morning.
well
Morning. Morning.
on this Friday, beautiful Friday, Knoxville, Tennessee. We call this we had false spring, and now we are back into winter here in Knoxville. And so next week's supposed to be 80 in Knoxville today. It's 30 something. So
Wow.
it's the beautiful part about it. With me, I've got the full gambit today. We got trusty sidekick kicks Matt and Rusty, and special guest as always, Mr. Dan Sheridan. You guys doing okay? I know we got three people in Knoxville here and one person in Indianapolis. I always want to shout out the Pacer Nation. How's Indiana doing this morning? Oh, you're muted.
Indiana is cold. It is getting warmer. Unlike the market, which is cold and seems to still be pretty cold.
Yeah, we'll
Yeah.
talk about that here in a second.
Yeah.
But first off, let's run into the 0-day rundown. Remember, this is our first week of our show. We're going to keep getting better and things like that. But I like the 0 DTE rundown. We talk about the most prevalent news that you can talk about on a day-to-day basis, which two things this morning. Guys, I know that some of you don't like LeBron. I get that. But one thing we can all gather around, there's an episode. Do you remember the movie The Untouchables?
Classic, yes.
It's a classic. Well, there was a
Picking up the
show.
troops, yes.
There was a show in the early 90s called The Untouchables, which it was the TV version of that. And I remember I shouldn't have been able to watch it as a kid, but as a kid, my grandpa wouldn't let me watch certain Clint Eastwood movies, but then like The Godfather, anything else I could just watch. Lay in bed with him at
That's
like
okay.
8 years old.
That
Just watch.
father's okay. I love it.
Yeah, that's right. So there's a episode, I'll never forget it. I was like 9 years old watching it by myself, where Al Capone and Elliot Ness team up, and they're sworn enemies, but they team up to fight a drug dealer who's selling drugs to kids. And this is very much what I feel like, especially with Dan and I talking about Stephen A. Smith, is two rivals, two people who, one person loves LeBron, one person doesn't like LeBron, coming together that we can all agree that Stephen A. Smith is not great. So, guys, what are your thoughts on Stephen A. Smith? I mean, this is just going to be a crap talking session to Stephen A. Smith this morning, hopefully. If any defenders of Stephen A. Smith, you can sign off right now, in my mind. Go ahead. For those who don't know, the reason LeBron last night, you can see the picture on the right, he played the Knicks, 8th straight win. Who's counting, though?
Wow.
LeBron finished with 30, I think. Luka finished with 30. And LeBron took time out of being the greatest to go up to Stephen A. Smith and just give him the business. And you can see in that image that he is indeed giving him the business.
Yes.
So my question is, and Troy and I, me and LeBron are over there on the left, high-fiving each other.
I love that.
What?
With a Luka haircut.
Well, yeah, that's basically my haircut from the back. Just don't look at the front.
And a new tattoo.
I've got the new tattoo, yeah. And I do. I too was traded from the Mavs for being overweight, so we have a lot in common. But what if you were LeBron in that picture? What would you say to Stephen A. Smith right now? I've got a very particular thing I'd say, but what would you guys say to Stephen A. Smith if you were LeBron in that picture?
Oh man, I mean, Stephen A. Smith he's New York media, right?
Well, he's kind of like the only thing ESPN has right now. Like they fired everybody else, and they just pay Stephen A. Smith $100 million a year to do whatever he wants.
Yeah,
right. He just got the big deal.
You forget about Pat McAfee?
Yeah, Pat McAfee from Indianapolis.
Well, Pat McAfee and Stephen A. Smith. Yeah, those two.
I think any time engaging with New York media could probably be better spent elsewhere. So I'd keep it short. I'd keep it short and give him the business and leave whatever business he deserved.
Yeah.
Is he yelling at him about his son? Is that what's going on here? Is that what's happening?
The rumor on the street basically is, Stephen A. Smith, they do this MJ LeBron debate. Like, I love that Stephen A. Smith every day is like, I'm so tired of this debate. Next up for the next 4 hours. Is LeBron the greatest ever? This is what they do every day.
Oh yeah.
But apparently, as he was talking about how Michael Jordan was the greatest, he was showing like lowlights of Bronny James,
Ooh,
and
Wow.
so
that's a low blow.
LeBron went up to him basically, and the rumor on the street has said something like, whatever happens, don't mention my son ever again.
I
Something
mean,
like that.
good on LeBron for protecting his family.
Yes.
That's a low blow. And if you were doing this in balanced things, then I don't think MJ would want people talking about his kids. I think there's some recent news with those, maybe. So yeah, give him the business, LeBron.
Well, and Troy was talking about The Godfather earlier, and I mean, what would they do? I mean, that was like a thing in the mafia. You don't mess with family. You don't talk about family. I mean, they had a little more repercussions if that happened. So I don't know if LeBron maybe is mentioning to him something about the trunk of the car. Isn't that like, hey, you say it again?
That's
or the I'm thinking other scenes of The Godfather, but I think it's just he's face to face with him, and it's like, let's go, right? Or you say that again. So I actually will stick up for LeBron on this one, that it's, there's no need to go after family like that, but
I mean, I think I would just basically tell him, I'm begging you, please stop being on TV for 8 hours a day. That just in general, like I go to the cigar shop and it's just nonstop. And I'll go to the bathroom and I look up and the questions are like, is Travis Kelce washed? And you're like, you make millions and millions of dollars. I mean, I think there's one thing we could agree on. If there's one thing we can't stand, it's just people talking about sports that can't play sports. Am I right, guys?
Yes. Well, he did
absolutely, Troy. Absolutely.
Yeah, it's
I don't want to waste any more breath on that. But anyway, so next up, jobs report. What happened? What happened? I saw a 40-point candle followed by a not 40-point candle.
Oof.
So first off, jobs reports looks like it came in a little soft. And I think the market wanted that, theoretically. But it just can't hold anything right now, it looks like. I mean, is that the read on it right now?
I mean, I'm just, let me pull up yield futures here. I mean, it looked like there was some movement in the futures overnight, as you would expect from a 24-25 VIX environment, right? Like, it would be unusual to have no movement. And that the open high low close of that minute in 8:30, these are futures numbers, not SPX, obviously, because it's pre. But it ranged from 57.35 to 57.86. So yeah, like, including the wicks, like a 50-point move, looks like about a 35, 40-point candle. And that was up. And now it's kind of regurgitated most of that to where ES is up 5-6 points right now. So yeah, I mean, we'll see. It'll be different in 30 minutes when we open, but right now it looks like we're going to open around 57.40, 57.45.
Yeah, we're going to be up a little bit.
A little. Maybe.
The real question, though, is like with something with a jobs report, right? If the ruling narrative right now is everyone's afraid of stagflation, you keep seeing things, stagflation. Is bad news good news, right? For jobs reports and things like that. Is that actually good news? And you think it looks like it is. So I think we'll be up today. And I imagine
that's what
it's Friday. Dan, you've talked about, we're kind of closer to the lower end of the range. The early January lows kind of.
Well, yeah, the 200-day moving average is 57.30, and so you have. I mean, it's like on one side you have that 57.30, which has kind of been, we've kind of been respectful of that move. And that looks like it's holding, at least for now. But the other part of the coin is, the thing that concerns me with Fridays sometimes, when you've had a volatile week, do people want to go home? How do they want to go over the weekend? And you have sometimes you got a 2-day weekend in the world of the recent catalyst being the tariffs. Do people want to go, over the weekend? It's like, I'm not going long over the weekend or something like that. So, my gut is like Rusty's that I think will be up today. But my big number I'm looking at is today, can we be under 100-point candle in the SPX, which, I mean, again, this is unprecedented. So when you look at a lot of the strategies that people do, especially the strategies that you need price movement, like the reverse iron condor, the Rick, any opportunity to say the word Rick, I'm gonna jump in and say it. But this can spoil people. It's like kids getting extra ice cream every night, and then you cut it off after 2 weeks. Here, we're not going to have, it's not the norm to have 100-point candles over almost this is the second full week we've averaged over 90 points candles. And that's unprecedented. I mean, and so it's, for people who like high volatility in this range, it's great, but definitely an anomaly so far. So far.
Yeah. Well, Dan, I mean, I want to look at I've got 2 tests to look at this morning, but I wanted to ask you, I mean, for those who don't know, Dan has been in the business a long time, has taught thousands of people, and he does a class quite often, basically, which is a 10%, trying to make 10% a month, and
a plan to
make 10% and looks at different strategies. Dan, I know you've got your toss up. I mean, what do you say to someone who's getting into options right now? And unfortunately for them, they got into options 2 weeks ago. I
mean, the first thing you say is paper trade or trade very, very small, right? And learn, this is a craft. And I think you have to, people come in, the biggest thing I've seen is people come into the options business, and if you look at their career or what got them to the point that they have some extra income to trade options, they were sane, very deliberate, all those good character qualities. But they come in this business, and it's like, Yahoo, where's the money? It's nothing to do with craft or nothing to do with learn. And it's the same thing. This is a business of craft. And I think for range-bound trades right now, obviously it's very perilous because we're not range-bound. So it's like, how do you, the key is this. If you're going to do a trade right now, what are you comfortable with, right? In this, and I think the key, at least when I was in the pits trading, it's like, you just trade what's in front of you. What's in front of you today? What's the vol giving you? How's the market moving? And if you feel comfortable with what you have on, the types of trades you're doing. But I think this is a great learning experience. I would rather people that are coming in the business learn to see something like this, because this is about as rough as it's going to get for range-bound traders. But again, that's why you have vehicles like SPY. And you can trade even in SPX. You could trade, you can do an iron condor for under $500 in SPX, 0-day or whatever, just 5 wide. You can do calendars 3 wide that are under $500. So you could, the key is trade small and learn. But people aren't, people don't always approach it as a craft, right? And so after a month or two, they didn't make all the money they wanted to, and they're on to the next silver, shiny object to look for.
Yeah. The chat's talking about how Trump's talking at 3 today, which is that's our new paradigm. Is anytime the president talks, you have to put a straddle on. It's like a drinking game.
Oh my god! A straddle with a ratchet.
Yeah, straddle with a ratchet. Yeah, I like
that's
that.
Right. And then some people are talking about, markets crave uncertainty. Markets hate uncertainty. Trump craves uncertainty. That certainly so far seems to be the case. We've had one term of this before, so who knows? Every term's different. JW, I got into options in 2008 trading iron condors right before the crash. God bless you. Blessings to you.
It's the best and worst of times. I started end of January 2020. Great time.
Yeah,
Wow,
that's right.
right before
Yeah,
before the
it
COVID.
was a great time. I can remember I had I mean, we won't take a long trip down memory lane, but I remember I had some puts for Boeing at like 310 or 320 or something. And during COVID, like I'm not sure what Boeing bottomed out, but it was sub 100. So like
Wow.
you could do the math on that, but
Yeah.
it wasn't as big as some of the GameStop things I missed by a week or two, but it taught me about options in an extreme way right away. And COVID was also, I was doing small positions, but I also went long on about 20 different companies with leaps at the end of March. And I had no idea that it wasn't normal. Like I remember looking at these being like, oh, these are up 700%, because I had bought leaps, and as the market recovered, had no idea that wasn't normal. Oh wow, this is 10x. McDonald's is 10x on this leap or whatever.
Yeah, that's right. Yeah.
But so those times of high vol are, you can see what you read about in the books of just really extreme Greeks, really extreme movement. So yeah, JW, good comment there. So Troy, I got a test. You want to talk about some tests or?
Yeah, I do. Do you want to look at the BAPA, Rick?
Sure.
Okay.
Let me
let me share. I've got it, Matt. So let me.
Oh, okay. Well, I can share my screen if you want to. Whatever.
No, I've got it here.
Okay. So let me explain what this is first. So the BABP, we get asked all the time in Option Omega, do you guys have strategies? What are the people ask the community? And like, we don't recommend anything. Okay. This is not advice. Like you guys know that. We have disclosures, etc. But we have this class called Build a Backtest Portfolio, and it goes through some thought process on building a portfolio of different backtests that work over a longer period of time than just a couple months. And so this is from the Build a Backtest Portfolio class, and this is a reverse iron condor, and this is a 0DTE. So first thing to do, got to give credit where credit's due. The first place I heard the term Rick was a friend of Option Omega, Steve from Navigation Trading. Shout out to Steve. If you're going to be in the crazy world of options, it's great to have a community. Steve has a great community at Navigation. So shout out to Steve. This Rick is super simple. And whenever I hear 0DTE got really popular in 2022 when SPX went to having expirations every single day of the week in mid 2022. And it was such a high vol environment. A lot of people just gravitated towards credit selling because it was very forgiving environment to credit sell. It was a high VIX environment. As Dan said, we weren't having 100-point candles every day like we're having, or 100-point swings every day like we're having now. And so this is this extremely simple backtest. You are going long with a call debit spread, and you're going long with a put debit spread. So it is an inverse or reverse iron condor Rick. And they are 30 wide on both sides, and you put it on at 9:30 and you do nothing. You do nothing. You just let it expire. SPX, cash settled instrument. And so it's 30 wide on either side. So your max value is 30. And you can see from the back test, the most it's ever lost is 2042. So the cost of it and the tent between the longs is going to be contingent on the VIX environment and what vol costs. But what's interesting is, and the reason why this is in the class is because it's not very fitted. So there's no limitations on days. This thing gets even better if you take off Mondays, I think, probably, because Mondays aren't great for RICs.
Hey, Matt,
And all we're looking
is your
for...
voice...
Matt, your mic is... Yeah.
Went crazy there for a second.
Okay, sorry. It sounds good on my end.
You're going to have to mute yourself for a second. Hold on.
Yeah.
You mean to talk about this? No,
Yeah,
it's
yeah,
bad.
go ahead and talk
Maybe
about
you might have
Rusty
to
talk
quit and
about it.
rejoin. Yeah, I'll talk about it. I mean, so a couple interesting things about this, right? So you're basically, this is sort of a contrarian trade, right? I remember Dan was talking about how I believe you were saying yesterday how market makers are contrarians by nature, which I kind of love. I consider myself. You can ask Troy. I'm pretty contrarian by nature. He worked for me for a while. It's just, sometimes it feels good to be contrarian when you think
Yeah.
everyone else is doing something crazy. So this is a contrarian trade in multiple ways. One, when volatility is down overnight, you're buying premium. Okay, it's getting cheaper. So everyone else will be like, oh, volatility is dropping, let's sell, right? It's going to continue. We're saying maybe not. Maybe volatility is down overnight, let's buy, right? You buy when it's cheap, and you could do the inverse of this, which I think Troy showed yesterday. You can sell when it's expensive. And so it's a contrarian trade. It's also contrarian in that, like Matt was saying, you hear about 0DT. Most people are talking about selling premium, 0DT. Well, this is buying premium. A lot of people don't talk about that. So that's what I love about the trade, right? You know that you have a fixed loser, right? You know what your loss will be. Now you can lose the entirety of the premium that you bought, right? Because you're buying debit spreads. You have to know that. This is a gut check trade. This is not a trade that's easy to trade emotionally, but here's why I think this is like a fantastic trade to do. If you want to learn how to trade and if you want to get better at losing, this is the trade to do it, because your trade will go to zero. I mean, if you go to the trade log, Matt,
Yes.
I think it's you sharing your screen, it will go to zero, and it will tempt you to do all kinds of stupid stuff. So let's say you get a couple losers, right? You see them at zero there. Let's say you get 2 of those in a row, okay? And you start to say, oh man, 2 days in a row of zero. What are you going to do the third day? You're probably going to, as soon as you're up, and maybe you're up big, what are you going to be tempted to do? Get out early, right? And so there's 2 out of 3, right? So maybe you're in that period there in January of this year, ancient history by now, and pre-tariff, period. And so maybe you're tempted to say, well, I got to start cutting my winners short because I'm afraid to lose again. I'm afraid of this thing going to zero. But that is, if you go back up, Matt, to the statistics on this trade, that's a terrible thing to do, because you need those winners, right? Look at this. You're winning only about just less than 60%, but your winners are more than your losers. Yep. And your max winner is a decent clip more than your max loser. So you've got to have those large winners. You've got to let it expire, because it could expire all the way in the money past the short, which means a max winner, right? $30 either side. And so that's why I would say it's a contrarian trade. It's a tough trade. That's kind of my main thing about it. Yeah.
Is this audio better, by the way? I'll just make a quick point.
Yeah, you're fixed. Yeah, that's all. Okay. Yeah.
Perfect. So just a couple quick things when we look at this back test, and I'll kick it over to Dan after that. The first thing is we are looking at a decent sample size. We've got almost, closing in on 500 trades now. We're looking at a decent time frame. We're in, year 5 here. And it's not very fitted. And there's no fidgeting. There's no management. When you hear, to echo what Rusty said, when people are learning 0DTE, you can read about a lot of pain being on credit selling, premium selling, and really bad slippage. How do you avoid having really bad slippage? You do trades that can't have slippage. That's how you avoid them, right? I mean, I have 5 cents entry slippage here, okay, on the entry. But what I'm talking about for really bad slippage is when people are credit selling and they have some sort of exit or stop order on, and it gets filled at much worse than their target, which happens to people. If you're in a trading community, just ask about it and you'll find some examples. So Dan, did you have a thought on this one?
Yeah, I think going off both of your thoughts, and Rusty, I'll start with one of Rusty's comments, which is so true. As I think there was a quote by Jack Nicholson, "You can't handle the truth." I forget the movie, whatever that was, but it was a great line. But
A Few Good Men.
Yeah, but if you said to me, Dan, can you handle a Rick? I'm going to be honest with you. I'd be very subjective. I don't think I can, the way it's designed to go. I'd have to build up some calluses. I'd have to go small because I'm not used to having a 100% loss on something. But it's I think this would be a good training ground because you need to develop that as a student or as a student of the market, because it's important because, whether you do an iron condor or a reverse iron condor, they both can win on a given day. They both can win. I mean, like you have plenty of people in your community who do iron condors. They win. But it's a different management style. It's a different path, right? The path of a Rick is going to be, I think it takes a different character. It takes, it's a different character. But I think it's a good thing because I've been mentoring this for about 20 years. And I'll tell you, the biggest thing, you try to get with students is, can you keep them long enough that they can keep through to get 30, 40 butterflies under their belt, 30, 40 double calendars under their belt. Most don't make it. They don't stick with it because once they lose a few trades, they go on to the next thing. One thing I want to mention real quick, just because of the current market, it was just mentioned there, slippage. And that right now, for anybody doing trades over the last 3-4 days, it's amazing how far. There's no such thing as a mid price. There's a mid range. And when you look at the mid range, and you'll look at like a $5 calendar or a $10 double calendar or whatever, and it's amazing. You're like, these guys should be put in jail. How far is there the difference? But it's all over the map. But that's when you're in the pit, the traders in the pit. When the market gets this crazy, a lot of times they can have maybe get special permission, have a little wider bid ask. I don't think that's the problem here. I think the problem is when you have 100-point ranges, things are changing very quickly. You have to be very patient. If you're doing a debit transaction, start it way low because if you're kind of a beginner trader, not as experienced, or even if you're experienced, you could pay up in this environment $1 easy on a spread if you're not careful. You have to watch it a minute, if it's a debit transaction, go pretty low, slowly come up. If it's a credit transaction, start high and come down. Because here's the thing, whether the market's crazy or not, the market makers have theoretically where they will do business. They know on a calendar, they'll do business at $10, right? Even though the market's going crazy and you might have a range of $7 to $13, if you come in there at their price at $10, they'll trigger it. But you don't know ahead of time. So you have to be a little patient. This is an environment where you could pay up big time. And so I think if you just understand that, I think that helps in this. But anyways, yeah, both some good points. I think the Rick is a gut check. And I think it's a good, and I think, but here's the key, one last point. Size is so important of a tool, right? Yes. Someone could say, well, I can't, I just said I couldn't handle a Rick. I couldn't handle a Rick on maybe a $5,000 trade. But if you said, Dan, could you $2,000 handle a smaller Rick? Yes, I could do that. And I think that's how you build calluses on these strategies. And, and that's the biggest, that's the biggest reason I think what I've seen retail traders not make it long-term is because they don't stick with the trading plan. And that's why, I'm excited about the bots and strategies because it takes out the biggest enemy we'll ever have in the market. And it's not the market, it's ourselves, right? Because we're so human and so, we're not going to stick with something if it goes against us. So bring on the bot. Yeah.
Yeah.
Matt, were you going to add one more thing to this?
Yeah, I know we got to move on to the next one. I'm going to make 5 points in under a minute. Okay. Point A. We'll do a whole segment on sizing. I'm sure somebody suggested XSP for this. XSP is a fraction of the liquidity of SPY, and SPX, but I will say if you're trading a trade like this at market open with XSP and you don't have to exit it, I would echo that statement. That may be an option for people getting their feet wet. Second, Troy's got this up for the last 90 days. You can see how it's done. Third, this is a sample Rick. I say this, there are as many inverse condors as there are short condors. There is a world-class backtester. Find one that makes sense. Fourth, there are many variations. You can try ratioing it. They don't both have to have a short. You can do far out of the money Ricks. There's a lot of ways you can do it. And fifth, if you want to see this more detail on this Rick, Build a Backtest Portfolio is a free class on Option Omega Academy. Back to you, Troy.
Thank you. It was under a minute, so shout out to that.
Yeah.
All right, next one, last one. We got to roll because market's going to open here soon. This is Drunken Butterfly. Shout out to an old friend of the show, a guy named Wizzy, who every once in a while comes up with some stuff that is shocking. This is a very small data set. This is one I've had in the old hopper for, man, a couple years now, I think. Looking at it now, basically it only runs when the VIX is 22, so we haven't had a lot of shots at it in a while. But basically what you're doing is you've got 3 25 delta puts, okay? You've got one that's 25 points in front of that. You got one that's 15 points behind that, and you got one that's 50 points behind that. So this would be a great, I tell you what, we got the time. Dan, would you be up for visualizing this in toss?
Oh, sure. Absolutely. Let's, you can help me walk through this.
Yeah. If you do it, and we'll go from there. So that everybody can see, I might keep it up until you have it built out. But
yeah,
basically, it's a 25 delta 0-day put.
all right. So sell a put, first leg of the journey.
Yep, and you're going to sell 3 of them.
And this is a 0-day, right?
Yes, sir.
All right. So we have March 7, 0-day. So 3 delta, 55.50 put. Okay.
You're going to buy...
1 second, 55.50 put. Okay.
Yeah, you're good.
And buy which one?
You're going to buy one put that's 25 points in front of that.
Before it. So buy the 55.75, right?
Guys, help me. My brain's not working.
Above it, right? So if I'm selling the
above.
55.50, buy the buy
Yeah,
one.
if you buy
Troy, right?
buy 175.
Yeah.
Okay.
And then buy another 35.
55. And then buy one more put, Rusty. Where at?
So if you've sold the 50, is that correct?
55.50, 3 of them.
3 of them at the 50, that means you need one in front, right? And then you need at 75, and then you need a 35 strike.
Okay.
And then you need a 0-0. So
0-0 delta or
5,700.
5,700. Sorry.
Oh, 57. I'm sorry.
Is it 5,700? Yeah.
Yeah, if you're at 57.50, then
Yeah.
minus 50 is 5,700. So it's
so
like a butterfly. Yeah.
Let me just get this one. Buy 5,700 put. So right around where the market is.
So while you're doing that, someone said in the chat only 4 trades this year. That's true because VIX has not been high this year. But if you run this back, now you can't run it since dailies because you did 100%. You're going to lose all your money. But if you did like 100K allocation at 10%, I think that'd be, you might want to cancel that.
Or maybe you don't want to cancel.
Oh, wow. Well, I guess not. You're not. Okay. I mean,
you're not going to lose all your money because
you're exiting. You're right. Yeah.
Is that right, Troy? I got to start it out would be like around a 33 delta if we did it today. And your negative theta. I mean, it's no risk on the upside, right?
Yeah, and you should be collecting. Looking at it. For the most part, you should be collecting a little bit.
Yeah.
Maybe not.
Okay.
But you might.
On this
have-
example, on the upside, if we're over that 5,700, the long put or up, doesn't look like you're making any. Oh, let me undo I'm sorry. Let me undo a lot of these. No, it looks like you're kind of in the hole over 5,700 at least. But again, these aren't market's not open yet. So
Sure,
these
market's not open
prices
yet,
are-
so you could have
What
to
does the
put it-
trade cost you initially? Yeah, is it a debit or a credit? I can't see the bottom of the screen.
It looks like it would be a debit because you're
That's-
paying.
Okay.
It looks like at least these prices, we're not open. The expensive one is going to be that at the money put, and that's going to overshadow everything else. So it looks like it'd be. Troy, is that what you had figured? Some kind of small debit or?
Small
you should-
debit usually.
You should
small
have a credit, but here's the point. Here's the
Credit
point.
or
I
small debit.
I completely threw it on you, and the market's liquidity. But the point is, if you look at that shape, you're gonna have that to some extent, except for you're gonna have a larger down move past the 5,500.
Yeah.
It's gonna cap. But the point of what I was gonna say is, if you look at this trade, what you're doing, don't let it confuse you to say that you're gonna sell 3 of the 25s first. Think of it as you're buying a vertical spread at first.
Yeah.
That's the way I look at it. You're buying a vertical spread. It's just that you're centering the put. The short put's going to be a 25 delta, and you move up rather than a lot of times you'll start with like where your long's going to be in a vertical.
Yeah.
And so in this, and what this does basically, I mean, the reason this wins, my theory is you collect a credit. VIX is high. So it's a high VIX environment, a high vol environment. You're collecting more credit, and your deltas are farther away because the VIX is high. And so you collect that pop, and you're going to let it ride. You're going to let it expire unless your short goes 15 points underneath it. So you're letting it have room to run. But I want to show you, let me put the reasons on here.
And a 22 VIX is making a statement. We're going down, and we're going down hard.
That's right.
Right?
So,
and you're going
Yeah.
with the.
Yeah.
That's exactly right. So
We're
the
not in an
losers-
uptrend. Yeah.
The put tested is going to be your stop, and you're going to get stopped on that put tested. The reason you give it extra room is because it's a butterfly structure. Those shorts, if you get to those shorts, it's going to be decaying, right? Depending on where you're at in the day. Like if you get immediately to the shorts, as soon as you put this on, you're going to get wrecked, or you're going to get put tested very easily. There's a good chance, right?
Yeah.
That gamma is going to be negative. But the gamma flips positive throughout the day up to a certain extent the closer you get to that short.
Yeah.
And so this is one of those trades where in a perfect world, what you want is you actually want it to see if I can find it here. This is actually a great example. You want it to pop a little bit on open, and you want it to stay well above that short. And as the day progresses, you kind of, especially like the last 2 hours, you want it to slowly start drifting down towards that short.
Yeah.
Like a butterfly, like any butterfly. You want it to be. So basically, you don't want to be near the shorts early on. You want to be near the shorts later on.
Troy, did you talk about the gap up condition yet? Because I think that's an important one.
Oh, yeah.
So
This is
the theory on
absolutely.
that one, right, is simply that when you got high VIX, the tendency for mean reversion can be really high. And so if this thing gaps way up, do you want to be selling something where you're going to get stopped out if there's mean reversion right at the open? No. Like, because Troy's point is, if this thing goes past the short puts 15 points at 9:45 in the morning, you're going to have a big loser versus if it happens at 3. And so on a large gap up, premium's going to kind of stink, first of all, compared to it being down.
Yeah.
And the tendency for you to mean revert and get stopped is a lot higher. And the backtester plays, I mean, again, it's a theory. You can say, well, this is a theory I have, and that's the great thing. You just backtest it, and if it makes it test way, way better with a condition like that, you put it in.
Yeah. We can talk about this one more. Lord willing, we have more VIX high over 22 environments, and we don't end the day at a VIX of 14. We will have a day like that. I mean, this is the thing that is in the back of my head. Like, all this stuff, I mean, CNBC, good gracious. Like, they're sitting there just being like, hey, calm down, guys. it's okay. We're not crashing. Like, there's not a lot of fear in the market. I maintain it.
That's right.
They're acting like there is. So
Yeah. Hey, Troy,
Dan,
can I say one quick thing?
please.
Yeah.
Please.
So in the pit, a lot of times you would see, kind of a move for the downside. You'd see a lot of ratios: buy one, sell two. Like buy a put out of the money, and then you're going to sell two puts much further down the road. And that type of trade, you want it to go down, but not too far. And so that's where you bring in this concept of a butterfly: buy one put, sell two puts, and then maybe buy another put way out there, right? Because the ratio buy one, sell two, whether you do it to the upside or downside, is a good offensive weapon as long as it doesn't go too far. And then you have that. So this is kind of in that scope of it, and having that, like Troy said, you want it to go, in a certain speed level as you go down there. But those were used a lot. It's just that buy one, sell two, and a portfolio margin account, they're not going to kill you with the margin requirement. But in a regular Reg T account that a lot of people have, buy one, sell two in the SPX could get very expensive quickly. So, but yeah, I like this type of a spread. And the key is it's over 22. 22 is making a statement. We're going down, right, for the most part.
Yeah.
And this would be good. And it's nice to have trades like in the back test that just play certain times. I think it was Matt. Wasn't it Matt yesterday that you said, Matt, that you had 3 trades queued for the day?
Yeah.
But 2 weren't going to get triggered. You want to?
Yeah, I've just gravitated towards my core portfolio. I'm back testing 6, 7, 8 years in these back tests. And what I found is if you just add a very simple technical level, like below 35, 40, 45 RSI in a market that's dumpy, that's very sold, is that an environment where premium selling works over 8 years? Yeah, the back tests are pretty informative. Likewise, if I'm doing some sort of positive bullish trade and we're not above the shorter SMAs, 3, 5, 7 day SMAs, does that have an impact on a back test where I have 8 years of data? And I found that a lot of times it is. So we don't use a ton. I don't use it more than one technical indicator. I usually just use one. It's a weather check. What's the weather like? Is this the kind of environment I want to be doing this in?
Very important.
On that note, Mark's about to open. Guys, it's been a fun first week. Rusty, thanks for jumping
Happy
on.
Friday, everybody.
Thanks, guys. We'll
Right.
see you. Thanks.
We'll be back next week.